right, good morning, Lagos. Good morning, everyone, wherever you're listening from. This is Follow the Money, and I am Ugodre. Pretty excited week it was last week. Let me start by apologizing for starting a little late. You know, these things happen in Lagos. Of course, if you're just joining in for the first time, we do this every Monday, 8 to 8:30 on this station. And of course, you can also listen to it on any podcast platform that you use. Maybe Spotify or any of the podcast platforms. You always have playback versions that you can play. And you can also listen to the previous episodes of this show. What a week it was last week. A whole lot to talk about today, guys. Whole lot. So strap your seatbelt well, because I'm going to go into a lot of stuff. But as usual, we'll start with the NGX All-Share Index. It did drop by 3.27% last week as the stocks sustained the sell-off. The bears sustained the sell-off. Looks like investors are becoming a little bit wary about the stock market for now. So we're seeing sell-offs persist. There was a little bit of a comeback, a pullback. I think it was on Wednesday, but then things went back down. So what exactly is happening? Why are investors now looking bearish? Well, you can point to the increase in interest rates that followed the announcement of the CBN Monetary Policy Committee last week. If you all recall, the CBN MPC did announce that they were going to be having an increase in MPR rate to 22.5%, or is it 22.75% rather? So that was a record high, and that signaled to investors that we're now looking at an era where fixed income securities are going to be attracting very high yields, right? So fixed income securities are maybe when you invest in bonds or treasury bills or automobiles or even fixed deposits. So they're likely to go up. So if you do have a fixed deposit investment with your bank, I know bankers won't like this though, but if you have a fixed income deposit with your bank, you might want to go check the interest rate they're giving you, because interest rates are likely to change going forward. That's exactly what the MPR signals, right? So, and how does that affect stocks? Well, the point is, investors say, well, if fixed income yields, especially risk-free fixed income yields like FGM, treasury bills, automobiles, or even FGM bonds, are now looking to be higher in terms of the interest rate, then we might as well rebalance our portfolio and then take some money out of stocks and then invest in the fixed income market. And stocks have been doing well over the last few months. I think the All-Share Index, despite the sell-offs that we've seen in the last few days, is still up 32%. So a lot of investors think that they've made enough money already for the first quarter of the year, so they might as well just cycle funds out of the equities market and into the fixed income market. And so that is what it's been like. And of course, top gainers last week, you didn't see any of the heavy hitters and the top gainers. That's expected because of what I just mentioned. So then, nevertheless, we still had the likes of Transcorp in there as a top gainer, and Transcorp did gain 10% last week. Talk a little bit about Transcorp later on this show. And then, of course, on the top gainer, topping that list was MTN. MTN did lose 19% last week, and I'll talk a little bit about MTN as well as we progress on the show. And so, what else happened during the week? We had dividend payment. One company paid dividend last week, and that is Geregu Power. Geregu Power paid 8 Naira dividend. Interesting, even as companies are going through all sorts of challenges, and this power company seems to be doing quite well. Paid dividend 8 Naira per share, and that adjusted its theoretical price, and so price dropped to 977 from 985. And there were other dividend announcements. Multiverse did announce dividends. If you have shares in that company, you want to check it out. They announced dividend of 5 kobo. They're going to be paying that on the 5th of October. No, sorry, on the 10th of May, rather. And we did have more dividend as well from Lafarge. Lafarge also released his result. I'm going to talk a bit about it later as well. Lafarge is paying 1 Naira 90 kobo in terms of dividend, and they're going to be paying that on the 26th of April 2024. So if you want to be part of that dividend, then you got to own Lafarge shares by the 1st of April 2024. So before the 1st of April 2024. So anybody who has shares, later than that, you might not be able to enjoy this dividend. So if you want to own this, you want to get that dividend, then you better get it in at about that date. Then Boa Cement, of course, did also release their results, and they also proposed dividend. So the dividend that they proposed is about 2 Naira per share, and payment date is the 29th of August. That's pretty far down the line, though. 29th of August 2024, and qualification date is 9th of August 2024. So if you want to enjoy that stock, that dividend, you have to earn the shares or own those shares up until that date. So that is 2 Naira per share dividend. And of course, Dangote Cement also declared its own results last week as well. And Dangote Cement also declared dividends, by the way. So if you own Dangote Cement shares, you might want to pay attention. They are paying 30 Naira per share in dividend, and you're going to get that dividend paid on the 29th of April 2024. And so to get that dividend, you got to be on their register by the 15th of April. That means you got to own those shares on or before the 15th of April. If you sell it 16th of April, you still get a dividend. That's what it means. But if you buy it 16th of April, you might not get the dividend. So you want to get that shares before the 16th. So like the last cut-off date is 15th of April. Seplat, yes, Seplat also declared dividends. A lot of companies declaring dividend, which is quite a good thing. I mean, that's why you invest, isn't it? You invest so that you can get dividend back. Seplat did get dividend 3 cents. That's what they are proposing, 3 cents. I'm sure you're wondering, why is it cents? Why is it in foreign currency? Seplat earns most of its money in FX. So it's a foreign currency based company. They make money in FX. And so it just makes sense that they pay their dividend in FX anyways. And of course, Seplat is also dual listed, not just listed in Nigeria. I think it's listed in the UK. And so they're paying 3 cents in terms of dividend, and proposed date. There's also a proposed special. So there are actually 2 dividends I'm seeing here. And there's a proposed final dividend, and there's a special dividend. Oh my God. When you have money, have money. Seplat did quite well last year. So they're paying a final dividend, and they're paying a special dividend. So 3 cents respectively. So that's 6 cents in total. So that is for Seplat. Qualification date is the 26th of April 2024. Not sure of the payment date yet. All right, so that is it for equities, and you've seen how equities went last week. So we're going to go back into what happened last week as well. I did talk about fixed income earlier on, and I talked about how interest rates for fixed income investment was likely going to go up because of the CBN's new policy direction, which is to increase interest rates. Remember, NPR is down 22.75%. So that means most lending is going to go up. So most of your interest rates for your bank loans are likely going to go up. So I'm sure, in fact, I did hear some people are already receiving letters from their banks that interest rates will go up. I was speaking to someone yesterday, and he was saying, look, it could even be as high as 35%. And I'm like, wow, how is that possible? And it's pretty simple. Apart from taking interest rate up, the central bank also increased what they call liquidity ratios and CR. Their CR, that's the amount of money banks can keep for themselves. So see it this way: you give your bank 100,000 naira, and you tell your bank you want in fixed income, right? And you want maybe interest rate. So the bank would have to take about 70 naira, the 70,000 of that or so, and keep with the CBN. So they probably have 30,000, right? And in that 30,000, they need to lend that 30,000 at an interest rate to cover for the 100,000 that they collected, because that's 70,000 or so that they've given the central bank. They're not going to get anything from it. Central bank is getting zero interest rate because the central bank is focused on mopping money out of the economy. So the banks only have 30,000 of that 100,000 to lend, and they're going to lend that money at an interest rate that will cover the entire 100,000. So think about it. So they've taken money from you at, let's say, 20%, right? Let's just use it as an example. And so they're paying 20% on 100,000. Okay, so it means they owe you 20,000 naira in interest. and they need to lend 30,000. So whatever it is they're lending must cover that 20,000. And so that ordinarily tells you that for them to cover that money, they need to lend about 30, 35, probably even 40% to make good margins. So means interest rates are likely going to remain high for newer loans in the short term. That's just the reality of monetary policy, and that's what's happening right now. And so on the other side, which I talked about, which is fixed income, which is those who have the cash and want to lend to the central bank, they're also going to see their interest rates income. This is income go up. And so last week, the central bank did sell OMO bills. OMO bills is open market operation. So it's one of those instruments that the central bank sells to, mop money out of the economy. And OMO bills last week, they did sell 1.1 trillion or thereabout in OMO bills. It was actually oversubscribed. The 1 year bill was oversubscribed. So it's like they have it in tranches. They have it in, I think, 70 days and some less than 360 days, and about 360 days or thereabout. Not really sure of the exact days now, but they do sell it in 3 tranches. And so the first 2 tranches, which is the shorter tenors, were largely undersubscribed, but the longer one was oversubscribed because, it just makes sense. It's not all the time that you see an Apex bank sell risk-free instruments at 21%. Yes, in fact, 21.5% was what the central bank sold OMO bills for last week. It's just incredible. So if you had money in your bank and you told your bank to invest in fixed income securities for you, maybe you have loose cash, because the central bank is saying there's 93 trillion in money supply in the country. So that means there's a whole lot of money out there, and the central bank needs to get that money out. And so the way we can get that money out is by giving you mouth-watering interest rate, so that, more importantly, that money doesn't find its way into Forex. Because what happens is when you have money and interest rates is low around you and investment returns are low around you, you tend to want to fly to safety, which is what also contributes to the exchange rate pressures. And so to disincentivize you from contributing to exchange rate pressures by buying FX and maybe keeping it as some kind of savings, and they're offering you this interest rate at 21.5%. It does have its own impact on the economy. That's clear. It has its own impact on the economy, and that means lending is going to get up. And one thing that's likely to happen is economic growth could slow down. It's usually a trade-off. You do not want to fight inflation by increasing interest rate and don't expect growth to be hampered, because businesses are not going to be able to lend. They're not going to be able to borrow, rather, and they're not going to be able to grow and expand. And so because the central bank thinks there's just so much money supply out there, and that is the reason why we're seeing all this issue. So we're going to take a short break, and when I come back, we're going to delve into some of the companies I mentioned here: Transcorp, MTN, Dangote Cement, Boa. You don't want to miss the second part. All right, we're back. I thought it was a short break. If you just joined in, this is Follow the Money, brought to you by Naira Metrics. My name is Ugodre, and I run the show. And this is every Monday, 8 to 8:30, and then you can also listen to previous versions or this current version of this program on your Spotify podcast. I'm sure you probably have it downloaded in your phone already. So just go there, search for Naira Metrics, Follow the Money. You will see it, and then you can save it so that you can always listen to it anytime you want. Of course, do share as well portions of the show that you do enjoy. All right, so today is a big day for one of Nigeria's largest conglomerates, indigenous conglomerate, and that is Transcorp Group. So Transcorp Group used to be just one company, transnational corporation, and they had been listed on the exchange for years now, for over a decade. But as it is, when you're too big sometimes, it's very difficult to really see value in your, especially when your entities, like your subsidiaries, are probably bigger than the one entity. So Transcorp used to be listed as a conglomerate, or still listed as a conglomerate that owned hotel, power, manufacturing as part of their portfolio businesses. So hospitality, manufacturing, food manufacturing, and then power within your portfolio. And so the company took a strategic decision a few years ago to spin off its hotel business, or its hospitality business, as a standalone entity, even though it's still a subsidiary of Transnational Corporation. And that kind of worked because Transcorp Hotel is now worth about 1 trillion naira. It's part of the suits. That's the stocks worth over 1 trillion naira. And so, check this out. So Transcorp Hotel is even worth more than Transnational Corporation. And Transcorp Hotel is a subsidiary of Transnational Corporation. And so the Transnational Corporation still had Transcorp Power inside as one of its subsidiaries. And so it wasn't spun off. It was just part of Transnational Corporation and kind of looked like they weren't getting a real market value of that company. And so if you're a shareholder, you want to always make sure that you have solid market value of the companies that you own, and that the companies that you own reflect to a good extent the large market value, and not that, or a good market value, and not that they are undervalued. And so Transcorp Hotel as a standalone seemed to have worked, isn't it? Because it is valued at 1 trillion naira, whether you like it or not. That's the market value. That's what the market thinks it should be valued at. And so today, Transnational Corporation is spinning off Transcorp Power. Yeah, so Transcorp Power, which contributes close to 50%, if not more, of the group's entire revenue and to a large extent profits, is now going to be spun off as a standalone entity. So it's going to be listed on the exchange on its own. So you're not going to have Transcorp Power PLC also listed. So on the exchange now, you're going to have Transcorp Hotel, and you're going to have Transcorp Power, and you're going to have Transnational Corporation. I really don't know, maybe they probably would delist the holding company later, but this is what we have at the moment, and that listing is going to happen today on the exchange, and they're going to ring the bell. And interesting that Transcorp Power is going to be listing 7.5 billion shares at 240 naira per share. So Transcorp Power today, if that share price stands, is going to be worth 1.8 trillion. You see what is that? How it is? How you can just get value out of your companies? Like when it was with Transnational Corporation, it was worth less than 500 billion. But now that it's going to be spun out, it's going to be worth 1.8 trillion. So we're interested to see if the market actually believes that that's the value. If that share price holds steady, then it means the market believes that's the real value of it. If it even goes higher, then the market thinks that it should even be more than 1.8 trillion. So interesting today. So watch out for that. They're going to be listed today. And of course, if you own shares in Transnational Corporation, you automatically own shares in Transcorp Power. So that's basically how it works. Right. Last week as well, we got important news. MTN, Nigeria's largest telecommunication network, and probably one of Africa's largest network, did release its result last week. And they announced a loss before tax of 177 billion. That kind of made headlines, 177.8 billion actually. That kind of made headlines because this was the first time in a while. In fact, the last time MTN recorded this sort of loss was when he had that problem with the Nigerian government where he had to pay fines. So in terms of MTN's core business, this was the first time that it was losing this much money in Nigeria. And that loss was so huge, it basically wiped out its shareholders' funds, which means that its net assets went to negative. And the reason why that happened, of course, was, because it said that it did incur foreign currency loss of 740 billion. So how did that happen? Of course, if MTN relies a lot on foreign loans so that it can import some of its equipment. And so if you took foreign loan, let's say you took $1 billion worth of foreign loan, and at that time the exchange rate was 450 officially. So the foreign loans on his book is what 480 billion naira. But when exchange rate goes up to 1,000, then all of a sudden that foreign loan in naira is now worth 1 trillion. And so that 600 difference is a loss to the company. That's how it is, because if you got to pay for it, so it's going to cost them more in naira to pay those loans. And so that's how these things work. And so in accounting, you immediately accrue that loss. And so 740 billion. Now, does it mean MTN is in trouble or their shareholders have lost all their money? Absolutely not. Wiping up shareholders' funds is not such a good thing because it means that you can't pay dividend, and it essentially means that creditors own that company in the short term. But companies like MTN are so strong and so they generate significant amount of cash flow, and they can cover that loss within a year from just their business. Yeah, very possible. And so that loss they have now, the whole they have is about 40 billion or thereabout. It's likely could expand because of the continuous devaluation that we've seen the first quarter of this year. But MTN makes about 300 billion or thereabout profits annually, so could likely cover that position within a year max, or even two max. And even if they want, they can also raise capital to just strengthen their net assets or their shareholders funds, as it's called. So that's what happened to MTN. Very interesting result. If you haven't seen it, you can go and check it out on Naira. There was a good breakdown there. But nevertheless, despite all the challenges, MTN did post revenue of 2.4 trillion Naira. That's what they got out. They got 2.4 trillion, up 22.6% from a year ago. So despite these losses, they did actually post, like this could have been like their record year in terms of revenue and operating profit. That is profit if you strip out all the issues of loans and taxes. They did make 773 billion, which is 5% more than a year before. So in terms of a solid business, it is still a very solid business. It's just that FX essentially just wiped out their profits, their operating profit, and affected their balance sheet. All right, so we move on now to Boa Cement. So Boa Cement also released its result last week. That's like the second, third, depends on who you're looking at, largest cement company in Nigeria. And profit after tax was 69.4 billion. They did make profit, unlike MTN. They did make profit despite the challenges. They said that they incurred foreign exchange losses of 69.9 billion. It was pervasive. Nearly all manufacturing companies reported losses, and I'm going to just run some of them down as I go on. Boa Cement revenue was up 27.7% to 459 billion. So they did increase revenue. Now, what is interesting and what we've seen at Nairametrics is that a lot of the companies increase their revenues because they reprice their assets. So they reprice their goods, so they increase prices. So volume didn't necessarily go up that much. Of course, you expect that because people are not going to buy as much as they should have bought, but they increased their prices, and so that also reflected in revenue. And they had to do that to cover cost. So in the case of Boa Cement, despite increasing revenues, operating profit dipped. So they did 74.69 billion in operating profit versus 129 billion the year before. So operating profit doesn't account for foreign exchange or for your interest on loans and stuff like that. So it just shows how well the business has done as a business. So they did have that challenge. And that another cement company, which is the third largest, if you look at it from a profit perspective, Lafarge did post profit after tax of 51 billion, slightly down from 53.6 billion they did a year earlier. Lafarge also reported FX losses of 21 billion. Remember I said Boa's own was 69.9 billion, which is about 70 billion. So Lafarge also reported FX losses. Lafarge, incidentally, also posted revenue of 400 billion Naira, which is 8.6% higher than what it was the year before. So Lafarge also did quite well. So in terms of operating profit, they actually even did better. And they did 102 billion operating profit versus 84 billion. So that was like 21% higher than the year before. So as a solid business, Lafarge did quite well despite all the headwinds. These cement companies seem to be doing well. Cement companies, you guys are doing pretty well, but cement prices are high. So you might want to check that. But I mean, for what I'm reading out here, you can see why sometimes they kind of jack up cement prices, because getting your operating profit to grow, it's a bit of a challenge for most of the cement companies. As you can see, Boa's operating profit did dip, and Lafarge did go up by 21%. That's operating profit. And then the giant, and that is the largest of them all, Dangote Cement, reported profit after tax of, wait for it, 455.5 billion. That was the profit after tax. And it was actually 20% higher than it was the year before, despite all the challenges that they faced. Lafarge also incurred FX losses. Dangote Cement also incurred FX losses. Nevertheless, it did do quite well. So revenue for Dangote Cement is sort of consistent with that of MTN. They sort of go neck and neck in terms of the largest company in Nigeria revenue-wise. Dangote Cement did 2.2 trillion, which is 36% higher than what it did before. So it is Nigeria's largest company on the exchange by all means. And their Nigerian business essentially subsidizes their like African operations. So in terms of operating profit, it's 734 billion, 25% higher, 25% higher than what they did the year before. So Dangote Cement, essentially one of the strongest performers last year, despite all the issues that they had. But Dangote Sugar, which is a sister company, did report an FX loss of 172 billion, and that affected their profit, which essentially swung to losses. So they made 108.9 billion loss. So for Dangote, it was a win and lose here. So cement did very well, but sugar did badly. So that essentially is the rundown for what happened last week. So it was an interesting week for the market. I did term that week a week of losses. So it was a week of routes. So last week was last week route. There's going to be more results coming out this week. So watch out for Naira Metrics. And we, of course, covering the markets in Nigeria as we always do. And then stay tuned as well to next week, Monday. We're going to have this show again, and we're going to talk about more market news and more of the stuff that's going on in the economy. This has been Follow the Money, brought to you by Naira Metrics. I remain Ugodre. Do have a profitable week ahead. Goodbye.